Hello everyone, welcome to Options Paycheck stream. I will be going through the options that we have planned on Sunday. There is a lot of trades that have been executed, so I will go through those and I will update also my trade logbook and we will go through the situation in the market, review each and every option I have in my portfolio right now and also talk a little about charts, how it was moving, what was the situation today. There were few dramatic moments. For example, with Nvidia, the price of the stock was going high a lot during the day, so it almost looked like the call with the 110 strike price would be executed, but then during the day, the price move was exactly the opposite, and it went down, and overall 1.5% down. It is really volatile day, volatile week. Actually, past couple of days has been really, really crazy on the market. And I think we will remember these days and trades we will do. It's really it's really good opportunity to learn and yeah, and volatility is also how high, so it's also a good opportunity to make good money on premiums. All right, so let's go and talk about let's go and talk about the trades. So I have here the Tesla call options that I have sold for 300. Uh, sorry, with the strike price 300. The the average price was 45 cents. Um, so let's have a look actually, and we will start from here. So it was Tesla. The price was 45 cents, and I will highlight green whatever will be updated. Right. We'll need to fix the formulas, but never mind for now. For Tesla, I think we don't have more. These options with 285 strike price, I have sold them last week, so we don't need to review them. Um, Overall, for Tesla, maybe let's have a look also on the chart. Tesla. So it seems that Tesla is moving within the range still. But we will see. I mean, it is really crazy what is happening. Anyway, our strike price is one somewhere around here, the other a little bit higher, uh, at 300. So I don't see right now too much of the risk that the options would be executed, would be assigned. Um, all right, move on. Let's go to Rivian. So for Rivian, I have open call options with the strike price of $13. It's this one, and so also let's have a look what was premium. So it was two call options with the average price of 6 cents. So this was a little bit lower than when we planned on Sunday, but also good. Maybe we can have a look actually how how the price has been moving. So uh, Monday, Monday is this green candle. So when the options been sold on Monday right after the market open, so it was around here. Since then, the price was going up. So obviously, if I was waiting a little, or if I maybe set the premium higher, I don't know, let's say at 10 cents, probably during the day, especially somewhere here, it would sell for a higher price. But yeah, it's always you know it's always difficult to or it's impossible to know in which direction the market will go, right? So with 6 cents of premium, I'm quite happy. Of course, if we look at the annual return, it's not so bad, 27%. So it would be actually it's actually quite nice trade. For this price, all right. Also, I'll be observing with what the price will be doing. There seems to be some resistance on the around the 13 or 13 and a half level. But still, there is quite a way to go. And when we were planning, it was the buffer zone, sort of safe zone, was 20%. So let's uh, let's assume the safety zone will hold and the options will expire worthless. So that then let's go to the put options. I will no, I'll go here and the price. So actually, I sold 9 put options with the average price of 4 cents. Um, Here originally the plan was for 10 with was for strike price of $10. But if we look at the chart, um, if we look at the chart, yeah. So what has happened during so on Friday the price was here, right? So it was end of Friday, price was 11:20. And so when we were planning the trades, $10 was quite low, and we would still be getting reasonable premium. But then when I saw the pre-market and the prices at pre-market, I realized that better trade will be done and safer trade will be done with $9, or even eight and a half dollar strike price. So I lowered the strike price, and let me just update this. So it went from 10 to and a half dollars. And yeah, and so I lowered the strike price to make sure that even if it's assigned, it's even at more attractive price, which is basically here, a little bit higher. Yeah, yeah, never mind. It's good, right? So yeah, it would be even at more attractive price. I think it is level when maybe the stock was there even only once. So it would be very, very attractive. But right now we are uh, nowhere near 8.5. We are now at 1080, and yeah, so right now it seems that the options will expire worthless, out of money. So let's capture also number of premiums. So it's 4 cents and nine options. So also I actually increased to 9, and this is interesting. So it is only this price. And so yeah, so the premium or the annual return is lower. It's only 18% with such premium and invested capital. But on the other hand, what we can, yeah, but on the other hand, in this environment, it's better to play safe, and make sure that I don't get assigned at high prices that might not be favorable. All right, so that would be for Rivian. Let's move on with GameStop. Let's have a look on the portfolio. Rivian, Nvidia. Let's have a look actually on Nvidia. So this was a very interesting play. uh, Especially today with what the chart was doing. It was quite crazy. So here I have one option, 33 cents uh, price. So it's this 110 strike price, 33. Yeah, that's good. And yeah, you can see 18% as a premium. So 18% as a annual return. And what else do we want to check here? Yeah, well, the chart, right? So I wanted to check the chart and actually show you what has been happening today. And when I was checking the situation during the day, I I was even thinking whether maybe it's going to reach the 110 strike price, and then whether I potentially need to roll the option or just keep it. Well, uh, because because really the situation is sort of unpredictable, and then during the day it starts to turn. Well, I will show the day chart, right? So it started it started really high today, and then it was growing for a bit, but then at the 105 it started to go down, drop again, and yeah, and it basically at 96 dollars. So let's keep it. Let's keep the option open. I mean, I could potentially close it now because it is actually in profit. It's very, very, very low profit. Yeah. But I could potentially close it as a risk mitigation. But I will, for now, I will keep it. Um, with every day, throughout the week. Actually, I will, if it doesn't go over 110, uh, the theta decay will help me actually to make this trade profitable. All right, so then it was Nvidia. Let's move on and review the other trades. It's Nvidia, and then we have GameStop here. I opened for GameStop. I opened two covered calls option with the strike price of $30 and 31 cents as a premium. So what was the plan? All right, so the plan was almost the same, right? So 31. And you can see actually the annual return from the premium on the capital invested is quite nice. It's 68%. So uh, I think it's because of the volatility. Let's check actually GameStop and the volatility. Hmm, Yeah, options. Yeah, see, 113. IV is 113%. It is really, really high. But this is interesting. Let's check actually for all stocks because this week is crazy. It is really crazy. Oh my god, Tesla 148%. This is insane. This is insane. I mean, we can have a look on VIX. Oh my god, guys, this is crazy. We are VIX, which is volatility SP 500 index. We are almost at the levels of COVID, and this is what 2008. No, sorry, COVID is here. So we are COVID is here. Yeah. So we are not actually near COVID levels, but not so far actually from COVID levels, right? Not so far from COVID levels. Let's zoom out. Yeah, this is crazy. No, hold on. Yes, all right. Yeah, that's what I was thinking, right? I was thinking actually that COVID is this and this is 2008, and then for some reason, I thought this is 2020. No, exactly. So we are almost at the levels of COVID, and we are halfway through to the levels of 2008, the financial crisis, right? So it is insane. It's not so often these levels. It's not so often how long they can. I mean, for 2008, it was pretty volatile for a bit. For COVID, it's similar. It's similar. And this is granularity is monthly. Yeah. So probably we will still see. So this is actually good for trading options because we will probably see volatilities even if it goes down, which I mean, let's see where we are. It's ramping up slowly. I mean, COVID, it was what? It was 3 weeks, right? So maybe 1 to 3 weeks, and then it started to calm down. The February, the 3 weeks in February. Yeah. So it, it might be still. pretty crazy. It might still be pretty wild. It will be good for option premiums. That's for sure. And so I was checking on the IV, right, and the volatility. So this was for Tesla, for Rivian. I assume it's also pretty high. Yes, 120%. I mean, those levels have not been seen for a while. This is really wild. Um, Nvidia. This is pretty stable. It's around, usually it's around, I don't know, 60, maybe 60%. 118. It's double. It is double, which means the premium is really higher. Um, and GameStop. Um, let's go to GameStop and check. So GameStop, if I go to options, and then that's interesting. It's not so volatile as the other stocks. But I wanted to check also with GameStop because there was interesting move on the market as uh, you know, as other stocks were going down, actually were dropping, GameStop is going up. So this really moves this really moves against the market usually. It's interesting. That's why it's in my portfolio because it's very interesting what this stock is doing, and you never know if there will be spikes like this again. And if so, then why not to profit on that? So it was for GameStop, and then I have two new stocks in my portfolio. Um, and what I did is I found two stocks that might be long term, very interesting place with multiple of 5 times, especially clear sign technologies. There might be potential for 5 to 10 times multiple in the few years. Uh, I was checking on the stock. The company seems to be well managed. The gross margins are improving. Um, there are insiders buying. Uh, there were insiders buying actually half a year ago or maybe 9 months ago for the price of 91 cents. The company seems to have enough cash actually for a few years, and they um, and they are positioned because the way how I structure the portfolio and start to think about new plays is basically I have their companies that are in favor or that are sort of in the manufacturing US manufacturing arena. um, and this company uh, provides clean technology to manufacturing. So it is it is really it might be very interesting play if the manufacturing is growing in US. Even as of now, they are growing pretty wild. It's They are growing 50% annually, and so yeah, with these prices uh, it seems like very good deal. They, yeah, I mean they've been few times those prices, but but it's quite rare. It's oversold on RSI levels, and yeah, and below the price of the owners. Um, what was I mean, the technical indicators sell for now, right? But this will turn, and there seems to be very little analyst coverage, which might be good because then the market is not looking into it very deep, and there might be a really big opportunity. So yeah, let's play for a few years. Meanwhile, I have 1,300 shares, so I can trade options on this company as well. Um, and I'm actually doing so, right? So I have no, I'm not. How comes? Ah, all right. That's actually that's actually company where it might be quite hard to sell options right now because the only options available are at the strike price, $2.50 and then $5, but the price is half a dollar, right? So yeah, so you are basically at the strike price. That there are no trades on options, and even when I was trying to do options more in the future, it was more or less the same situation. You know, you just there's basically no market. I think this is that you have. No, it's not this number. I would need to adjust the columns here to see how many options is open actually currently. But the volatility on this one is crazy. So if there were options closer to the current price, it would be probably with very, very nice premium. All right. So that's I mean this we covered as well. That's for clear sign technologies, and we can move to Cleveland Cliffs. So this is another company that is quite interesting play, um, because I mean it's at the prices below. It's at the prices below when the insiders or where the insiders were buying. So you can see insiders buying recently at the prices of 870, 1080, 1056. Um, it's not for crazy amounts, but yeah, they are buying at these prices. Year ago, even quite significant, actually, quite significant purchase at the price of $16, right? Uh, did he sell? No, he didn't, right? So he didn't sell. He We can check if he's still CEO. And yeah, he's been chairman, CEO. Yeah, so right? So you would see, if there were any cells, you would see actually those, but it doesn't look like. So the insiders are buying. That's very positive. The price right now is actually below. It's a steel factory, so they produce steel, and with um, with manufacturing going back to the US, this might be another interesting play. It's close to oversold territory, or it was actually on the Monday. Um, yeah, so this is another stock that I bought, and I started to trade options there as well. So I I opened the $9 uh, strike price calls, because I have what I have how many shares? I have 100 shares. So for those 100 shares, I opened also the calls, right? At $9, and average price is 4 cents. So maybe let's put it here in the Excel. Few more. CLF. It is puts weekly strike price 9. Then what it was, one option, and it was 4 cents, right? 4 cents, yes. Uh, that's interesting. Aha, because it is stock price when opening the position. I think that it was actually around 7. So what was the purchase price? Average price 740. And I was buying somewhere here. Yeah, somewhere here. And so it's also time when I open the position, probably, or open uh, the options trade. So yeah, 28% return on the invested capital. Not bad. Not bad. Uh, and then we have for CLF, we have also covered calls. No, sorry, this was covered calls, but we have also some puts. Um, right. So let's have a look. Um, calls, and then we have two puts. So one with the strike price of 6. Strike, uh, strike price of 6, and the other was strike price of 5. I copy this over, and so for strike price of 6, we have 12. Uh, we have 12 options for 006. Okay, 12 options, 006. 42%. 42%, that's pretty nice. And today Actually, today we were moving towards the territory of 6. Let's um, let's draw the line here so that it's like visible. It's better visible for us. Right? And for the call, the strike price was 9. So let's again put here 9. So for the call, it seems pretty safe territory. Let's see for the puts. So one is around 6, the other is around 550, right? So look, we will document the 550 also in the Excel sheet, and it is two options for average price of 11 cents. 550, two or average price of 11. So see, this would be even nicer, 77% on return on capital. Um, so overall, and I will need to check for the fees, but overall, this week it's $295 on the options premium, which is not bad. Which is not bad. In the If you consider the last 2 weeks, the return on capital is 32%. So yeah, altogether $974 in the 2 weeks. So yeah, it's quite nice. It's quite nice. And let's wait. I mean, this week we will see a lot of price movements. It's not over yet. It will be really wild. Um, and I'm really curious whether we will have some of the options executed, or whether they will just expire worthless. Um, just mark here that they are all open, and yeah, they are also weeklies for April 11 formatting. I will fix later. Yeah, so that's how it is. That's how it looks right now. Um, it's uh, it's interesting. It's interesting where we are. I think this is to be observed. Cleveland Cliffs. No, no, this one, specifically this one, to be observed. Uh, if it's falling too much, whether um, no, there will be decision whether close it yearly or not, um, or maybe some of them, or to roll. Yeah, so really, we will see, and then I think then maybe Nvidia. Yeah, it's another one that will be sort of risky, and might be better to close it early. Yeah. Right. Right. So this was the review on Monday. Sorry, on Tuesday. So Tuesday review of trades that has been happening on Monday. Um, I will do live stream again, if there are some extra movements on the stock markets, which might be the case. If you like the stream, please subscribe to my channel, please like the video, and yeah, see you soon. Have a nice day, guys.